Already moving through the early afternoon on Wall Street, and the tone right now is cautious but curious, especially around AI and media. I'm Grant Mercer. This is Storm Stock Solutions, and we're here to bring some clarity through the chaos of today's market action. What's new this hour is a fresh wrinkle in the AI hardware story. According to reporting from MarketWatch's Brittany Nguyen, Broadcom is under a bit of a cloud thanks to what investors don't know. The company has disclosed a fifth AI customer, but hasn't given much detail. And there's confusion around what exactly that means for Broadcom's relationship with OpenAI. That lack of clarity is spooking some shareholders, even as analysts largely remain calm. This is a good example of how, in an AI-driven market, transparency around big customer wins and pipeline can move sentiment quickly, especially in the high-expectation chip names. Broadcom's mystery lands right on top of a broader shift we've been tracking: the AI trade coming under pressure and getting more selective. A piece from Philip Van Dorn at MarketWatch is getting traction as it looks ahead to stocks that could work in 2026 if the everything AI rally keeps cooling. The emphasis there is on solid fundamentals and realistic AI cash flows rather than just hype. That dovetails with earlier commentary about names like Alphabet and Amazon, which Christine G highlighted as potential long-term AI beneficiaries because they can embed AI across cloud ads and e-commerce. The market is effectively asking who can actually monetize AI at scale, and not just who talks about it the most. On the sector front, retail and consumer names are quietly in focus. Lululemon remains a key story. As Claudia Assas and Tommy Kilgore report, the company's ousting of its CEO after a rocky year is drawing praise from activist founder Chip Wilson. That kind of boardroom shakeup often sets up a prove-it phase. Traders might watch for any updated strategy on inventory, international growth, or margins, but they'll want to see execution before assigning a higher multiple for the long haul. For now, it's a name I'd categorize as a watchlist story, where the narrative could evolve quickly around headlines or guidance. In media and streaming, there's an intriguing under-the-radar theme developing. Alex Jacques at MarketWatch lays out why a hypothetical deal that sees Netflix or Paramount buy Warner Bros. Discovery could be an unhappy ending for streaming customers, and potentially a regulatory flashpoint. The argument is that a more concentrated, big streaming landscape might invite calls to block deals or even break up the giants to get prices down. For investors, these kinds of opinion pieces matter because they frame how regulators and politicians may think about future M&A, and whether big content tie-ups will be easy or hard to get across the finish line. There are also a couple of personal finance and demographic angles running in the background that, while not moving intraday charts, do shape the bigger picture. Richard Eisenberg writes about the rising odds of living to 100, asking bluntly, can your money handle that? And Quentin Fottrell's piece on a 61-year-old worker debating whether to retire and downsize underscores how job stress, healthcare fears, and nest egg levels all influence risk appetite. Over time, these trends can affect flows into equities versus income products, and how much demand there is for long-duration assets. From here into the next hour, I'll be watching whether that Broadcom uncertainty bleeds into the broader AI hardware complex, or if the market treats it as a company-specific communication issue. I'll also be keeping an eye on consumer-facing names, from Lululemon to the streaming giants, to see if any follow-through emerges as these boardroom and antitrust narratives develop. And of course, we're marching toward the closing bell, when we'll have a full wrap of who led, who lagged, and how these AI and media crosscurrents settled out. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,